Welcome to Betashares Explains ETFs. My name's Ellie. In this series of 8 videos, you'll learn all about exchange-traded funds, also known as ETFs, from what they are, their benefits, and how they're constructed, to the different types of ETFs available, and how to use ETFs in a portfolio to support your investment goals. In this lesson, you'll learn about what ETFs are, their benefits, and how they work. Before we begin, if you haven't already, we suggest completing our investing course first. It will give you the foundations of investing and help you better understand where ETFs fit into the equation. Ready? Let's get started. ETFs are diversified managed investment funds which trade on the stock exchange, such as the ASX. ETFs offer flexibility and access benefits of a share while providing the diversification benefits of a managed fund, generally at lower costs. As well as exposure to a broad range of asset classes, ETFs offer exposure to different themes, regions, currencies, and more. This makes them suitable for a wide range of investors with different risk profiles, investment goals, and time horizons. How do ETFs work? When you invest in an ETF, you gain exposure to a fund which holds a collection of investments in its portfolio. Let's use a bag of marbles to demonstrate this. Unlike buying a single asset, such as a stock, an ETF provides access to a portfolio of assets in one trade, helping add instant diversification to a portfolio. When you buy or sell an ETF, you're buying and selling an ETF unit. These units trade on the stock exchange during market hours. An ETF usually generates returns by tracking a specific index which measures or benchmarks the performance of different markets. A well-known market index is the US-based NASDAQ 100 index. In the same way that an index moves higher and lower over time, so too will the performance of an ETF tracking that index. There are hundreds of ETFs to choose from that provide access to different indices, whether at the asset class, sector, or thematic level. Let's run through examples of indices and ETFs providing access to them. The Betashares Australia 200 ETF aims to track the performance of a broad market index. This index comprises 200 of the largest companies listed on the Australian share market. The Betashares Healthcare ETF, currency hedged, provides exposure to a more specific sector by tracking an index consisting of the world's leading healthcare companies. And lastly, the Betashares Electric Vehicle and Future Mobility ETF provides exposure to a theme or thematic by tracking an index that comprises of approximately 50 automotive technology companies. Of course, there are hundreds of other ETFs to choose from. We'll cover those off in Lesson 4. But for now, thanks for watching Lesson 1, where we learned about what ETFs are and how they work.